According to fundamentals, Tesla is an overvalued electric vehicle manufacturer when compared to its competitors. Tesla has a PE ratio of 58.87. What this says is that investors are willing to pay almost 60 times Tesla's annual profits for a share of stock. Here's what current and potential investors need to know about Tesla's analytics. At the time of this recording, Tesla is trading below $200, a 51% decline from its 52-week high of $384 on April 5th, 2022. Key factors outside of PCE have affected investor sentiment towards Tesla's share price. Notably, Elon Musk's acquisition of Twitter that required a liquidation of 22 million shares of Tesla stock, reduced production at Tesla's Gigafactory in Shanghai, China, and delayed timelines on vehicles, notably the long-awaited Cybertruck and Semi. Tesla's main competitors in the automotive and electric vehicle market include Volkswagen, General Motors, BMW, Ford, Toyota, Rivian, NIO, BYD, and Lucid Motors. Out of these companies, the Chinese manufacturer BYD is Tesla's strongest opponent globally.
Tesla last year reduced its prices in China twice. BYD increased its prices. We're direct competitors. We're so much ahead of BYD. BYD is so much ahead of Tesla in China. It's like it's almost ridiculous. And if you look at BYD, which most people have never heard of, if you count all the manufacturing space they have in China to make cars, it would amount to a big percentage of all the land in Manhattan Island. And nobody ever heard of them a few years ago.
Tesla's net income is below GM, BMW, Ford Motor Company, and Volkswagen, despite giants GM and VW being less efficient than Tesla. The health of the economy will have the greatest impact on Tesla's stock momentum. According to the Bureau of Economic Analysis, PCE, the Personal Consumption Expenditures Price Index, reflects the changes in prices of goods and services purchased by consumers in the United States. It revealed that personal income increased 0.6% at a monthly rate, while consumer spending increased 1.8% in January. Despite consumers earning more personal income, their rate of spending increased 3 times the amount they earned. These economic statistics provide a comprehensive, up-to-date picture of the U.S. economy and influences decisions of government officials, business people, and individuals. According to the latest PCE numbers, inflation is increasing. Fed Chairman Jerome Powell has stated that paying for the economy was necessary to combat rising inflation.
There's a very high likelihood that we'll have a period of what I've mentioned is below trend growth, by which I mean much lower growth, and we're seeing that now. So the median forecast, I think, this year for among my colleagues and me was 0.2% growth. So that's very slow growth, and then below trend next year. I think the median was 1.2, also well below. So that's a slower, it's a very slow level of growth, and it could give rise to increases in unemployment. But I think that is something that we think we need to have, and we think we need to have softer labor market conditions as well. We're never going to say that there are too many people working, but the real point is this: inflation. What we hear from people when we meet with them is that they really are suffering from inflation, and if we want to set ourselves up, really light the way to another period of a very strong labor market, we have got to get inflation behind us. I wish there were a painless way to do that. There isn't. So what we need to do is get rates up to the point where we're putting meaningful downward pressure on inflation, and that's what we're doing. And we certainly don't hope. We certainly haven't given up the idea that we can have a relatively modest increase in unemployment. Nonetheless, we need to complete this task.
When people spend more money on goods and services, it can be good for the economy and stocks. But if the rise in spending is because prices are going up, it can be bad for stocks in the long run. The relationship between spending and stocks is complicated and affected by many things, like how companies are doing and what's happening in the world. It's important to look at all the factors to understand how spending affects stocks. Despite economic pressures, Tesla over the past year has had a sales growth of 51%. Over the past 3 years, their sales have grown over 230%. However, rising interest rates have caused prices to increase for borrowers taking out loans for Tesla vehicles. Economic concern has also caused potential buyers to look for more cost-efficient vehicles, lowering demand for the luxury electric auto vehicle maker. Legacy automakers are coming for Tesla with regards to the affordable automobile consumer market. The best outcome for Tesla investors is that Tesla reaches its goal of 20 million units produced and sold by 2030, in addition to breaking news of an actual affordable middle-class SUV and a highly effective full-service driving technology. Tesla currently is a stock that should be valued and held for its long-term growth potential. However, speculation should be analyzed in reality as opposed to lofty star-driven expectations. Make sure to watch next Tesla News.